I'm Jacob Reeves. I'm a senior tax manager here in our Newport News office, and today we are going to be going over some individual and estate provisions from the One Big Beautiful Bill.
Hi, welcome. My name is Marie Wimmer. I'm a senior tax manager out of the Roanoke office for Brown Edwards. All right, another change with OB3 were the changes to the child tax credit. This was permanently extended and increased from a maximum of $2,200 for 2025. It will be indexed for inflation going forward. You will need to have a Social Security number to claim this, which is a theme that you'll see throughout OB3. The refundable portion is permanently $1,700, indexed for inflation, but the portion for other dependents is only $500 and not indexed for inflation. And we will be talking about this child tax credit more later. Now, under TCJA, when they made those changes to the alternative minimum tax, not as many taxpayers were subject to this. And thankfully, under OB3, that has been continued. And now the phase outs have actually been increased to $500,000 for single, $1 million joint, index for inflation. And the phase-out rate was increased from 25% to 50%. So again, I see this not impacting as many taxpayers.
Yeah, and I especially just the combination of what that original tax reform, Tax Cuts and Jobs Act did in 2017 is a lot of people ended up not being in AMT because the SALT cap got limited. That was usually their largest add back that would throw them into this calculation. So even though we've got those higher thresholds, a lot fewer clients are even talking about being in that situation because there's not a huge difference in income typically.
So continuing on with changes that OB3 includes, we already spoke about the SALT deduction, which is within itemized, but in just itemized in general, there's some changes. So under TCJA, we were no longer allowed to deduct miscellaneous itemized deductions, and that is now permanent under OB3. What they did add was a line for educator expenses within itemized. We still have the educator expense deduction above the line, but it's very small. And so now we're able to take additional educator expenses as an itemized deduction if you itemize, and it now includes more categories for coaches, athletic, non-athletic equipment. The P's limitation that was removed with TCJA is now permanent, which is good, but it was slightly replaced by something else, which we'll talk about in a minute. And then we also have a change to wagering losses. So before, you could only deduct wagering losses up to wagering income. Now we have a different calculation where we can use the lesser of 90% of wagering losses or wagering income.
Yeah, so if you win big, it looks like you're not even going to be able to claim all of your losses there to offset it.
Continuing on with itemized deductions, and this is what I was alluding to in the last slide. So the P's limitation is gone, but now they've replaced that with a new overall limitation on itemized deductions. But this does only impact those top taxpayers and the 37% top tax bracket. And you can see the calculation on the slide there. Sometimes it makes more sense to put some numbers to that. So for example, if you're married filing joint and the $800,000 adjusted gross income, you're going to be in that 37% top tax bracket. Let's just say, for example, you have about $45,000 of itemized deductions. You can run through this calculation now. So 2/37 of your itemized would be about $2,400. Or if you look at that second calculation there, I'll read it. Taxable income that exceeds the beginning of the 37% tax bracket. I'm going to stop there. The top tax bracket for $37,000 this year is $751,600. So you have to take that difference between $800,000, the $751,000, times that by the 2/37, and you get about $2,600. You're allowed the lesser of the two, which would be $2,400. So now the itemized deductions that you thought you were going to take at $45,000 are now reduced by that $2,400.
Yeah. Yeah, and I think a big note here is even though that QBI deduction for 199A isn't an itemized deduction, they did come out and explicitly say it does not apply to this. We're not going to limit that QBI deduction under this scenario.